Okay guys, so in this lesson, we're digging into management. This is part 1 out of 3, so there's going to be 3 different management strategies here. But in part 1, management, we're going to be talking about short-term management. And this is literally a management strategy that I always start off with. This is my favorite management strategy. It's the management strategy that's kind of the most consistent, It's the most black and white. It's this happens, you exit the position, period. And it doesn't require a lot of discretion. It's literally, you get that on the chart, you exit the position, And with this, the second management option it's going to blend together, but let me explain management part 1 a little bit more. And with the short-term management, what you're going to be mainly focusing on, you're going to be able to catch that daily run as a day trader, So as a day trader, you're typically trading that daily run. You're catching that daily run, not a daily trend, but a daily run. And by catching that daily run, there's one principle that you need to follow. Write this down, right? A run is a trend and a trend is a run. You guys know that, right? From the multi-time frame analysis lesson. Well, this is enter on a trend change, exit on a trend change, okay? So let's say you're picking an IBO, you're entering on a trend change, or a CBO, you're entering on a trend change. Even an ABO, an advanced breakout, you're entering kind of as the trend change is happening, as the trend change is beginning. Well, what's the best way to exit then? Exit on a trend change too, So if you're catching that daily run and you're entering on an intraday trend change, that means that daily run has begun because the intraday trend has begun, right? So what happens when that intraday trend ends? That also means the daily run comes to an end, right? And the daily pullback begins. Simple, right? So this is where we're going to be digging into more. It's exiting on a trend change. You enter on a trend change, so you exit on a trend change as well. And this is a very simple management strategy. You're literally just following the EMAs. You're following the 4-hour EMA, or you're following the 1-hour EMA, and then you're exiting once that EMA is broken. Okay, and this can be applied to swing trading as well. So if you're a swing trader and not a day trader, you can apply this strategy to swing trading. You'll just be following that daily 50 EMA. So instead of the 1-hour 50, it'll be the daily 50. Instead of that 4-hour 50, be the weekly 50, right? Catching the monthly run and a daily trend instead of a daily run and a 1-hour trend, right? So without going any deeper into this introduction, let's hit the charts and I'll show you exactly what I'm talking about. All right, guys, so we're going to start off by looking at some screenshots of a few of my positions. And the reason why I'm going screenshots is just because it's going to be much faster for me to do so, and you guys are going to get many more examples than if I had to record live charts. But again, let's talk about short-term management. So short-term management is pretty much, it's trailing the EMAs or trend lines, but also write this down, enter on a trend change, exit on a trend change, okay? So the main part of short-term management is exit on a trend change, okay? Or exit on a breakout kind of thing. And that's what we're going to talk about. There's trailing involved. So you're going to be trailing either the 4-hour 50 EMA, the 1-hour 50 EMA, or both. A lot of times I'm trailing both of them. And I'll explain all of that here with multiple examples. So let's start off with this example. This is the trade on pound dollar that I have taken. And again, this is, what do you guys think this is? What kind of setup would that be? So this would be an IBOB, right? Because we didn't have that trend change on a 4-hour chart, right? But 1-hour break and retest. So it's an IBOB taken for live entry. And again, I was targeting more than 6% here. I was targeting a little bit farther down, but I exited right here, as you guys see on a 5-minute chart, for 6%, just where the 1-hour time frame broke out. So you see, I exited when the 1-hour time frame broke that 1-hour 50 EMA for 6%. So this is how it goes. Short-term management, exit on a trend change and trail the EMAs. Okay, so this is kind of how this went. I'm going to walk you step by step. So the trade was taken short, okay? And the first thing that we had in our way was the 4-hour 50. until price action breaks the 4-hour 50 EMA, I don't do anything with my stop loss. Okay, so for IBOs, until that 4-hour 50 EMA is broken, I will not do anything with my stop loss. I will keep my stop loss where it is, okay? Because it might pull back a little bit, and then I'll react manually to it. But I don't want to get stopped out by, if it just kind of rejects the 4-hour 50, pulls back from the lower high at my entry price and then drops, that could happen. So personally, I will not bulletproof my position. So meaning take my stop loss and move it to my entry price, just a little bit below my entry price. That's bulletproofing, so take your stop loss, move it all the way to your entry price, and you're eliminating all your risk. I will not do that until that 4-hour 50 EMA is broken. So once it broke that 4-hour 50 EMA, and you can see here it started accelerating to the downside. Well, at that point, that was right here, the second day into the entry, as you guys see on a 5-minute chart. At that point, on the third day, I bulletproof my position and locked in 1%. Okay, so at that point, pretty much I trailed the 1-hour 50. So I bulletproofed at the same time because it was a big move. Actually, that was this move right here. Okay, so during this move on the 1-hour time frame, that was the move that fully broke past that 4-hour 50, right? Because the first move, this initial move right here, that's what kind of broke right here below the 4-hour 50, but it still was kind of chilling on it. It wasn't like a full break and retest, so it's just kind of chilling on it. So at this point, I still didn't do anything with my stop loss, but once it started to move down for the second time, so that was this acceleration from the 4-hour 50, at that point, took my stop loss. I bulletproofed it, but I also went farther and locked in about 1%. Okay, so meaning I placed my stop loss like right there. That was when I was already accelerating, when price action was down here. Okay, at this point I locked in 1%. Okay, and then I let it ride. And you can see here it's already accelerating massively. So I don't really want to hold a 4-hour pullback. Okay, because it's accelerating so fast, so I don't want to be holding a 4-hour pullback. So at this point, I'm more leaning towards the 1-hour management because of how far it has moved. If I hold the 4-hour pullback, I will lose a lot of percentage, right? That's my thinking. If I hold the 4-hour pullback and exit, once it breaks the 4-hour 50 EMA, I will lose pretty much half of this position. And I don't want to lose half of my profit. I want to lock in as much profit as possible. So when it starts accelerating like this, what I then do is start trailing that 1-hour 50. So at this point, I'm more trailing along that 1-hour 50 EMA. And in this case, it was this trend line. So sometimes I'll toss a trend line in there. They can be a little bit more accurate. And I will be pretty much at this point, I was locked in 1% right here, right? So then I do this daily at the end of every single day. So pretty much when I make my new watch list, that's pretty much when I do it. Sometimes I'll adjust during the day. But in this case, I would have been trailing that 1-hour, that trend line on the 1-hour chart as it was dropping. So when this day closed, the third day, when that closed, right? At this point, that was like right here, and I had my stop loss right here, pretty much locked in about 2% or so, or 3% roughly, right? And then when it continued to drop for the fourth day, it went even farther down. Fourth day was right here, okay? So when the fourth day closed, I also bulletproofed and pretty much moved my stop loss to about here. So that would have been about 4% locked in, right? And then I hit that 1-hour 50, never broke the trend line, And at this point, like I said, I don't want to hold that 4-hour pullback because that's at the lows. If I hold that 4-hour pullback, I will lose a lot of percentage. I will literally be taken out for 3%, So at this point, I locked in about 4. And then when it got squeezed out, you can see right here, boom, it finally broke out. Okay, we have bullish MACD, the 4-hour chart gave a double bottom, and the 1-hour chart broke out. Trend change, right? Signs of a trend change and a breakout. So right here, exit on a break, and right there I exited for 6%. Easy, right? So this is kind of a short-term management. It's meaning that you're taking your stop easy, because you're always anyway going to exit on a trend change. Like if the 1-hour chart broke this trend line right here, I would have exited, kind of thing, So I'm always going to exit on a trend change. It's very rare that my stop loss gets hit before I exit, A lot of the times I will lock in my profit, the majority of the time I will exit on that trend change anyway, but I still want to lock in my profit in case I'm not on the chart and this just explodes massively to the upside. I want to have my stop loss somewhere, so that I at least get out for something, but my stop loss being hit is not the main part of this management. The main part of this management is exiting on that trend change. That's the main part. Exit on the trend change when it breaks out to the upside and you believe there's going to be a trend reversal, followed by another IBO to the upside kind of thing, So exit on a trend change. That's the main criteria. But at the same time, the farther it goes, you also want to lock in profit. So you want to bulletproof, once it kind of clears that 4-hour 50, then you want to bulletproof. Then you want to lock in profit as it kind of goes down, safely kind of staying above that 4-hour 50, or if you're going to go tighter, like in this case, staying above that 1-hour 50 or the 1-hour trend line, safely staying above that, so that right here, when it was kind of bottoming out, I would have already had my stop loss like pretty much above this high, like right there, So at this point, if I wasn't on the charts and it broke out, it would have just had to go a little bit higher, and then I would have already been taken out for about 5%, instead of 6 or 5.5. Right? So you always want to do that. But the main part of this management is exiting on that trend change. Let me show you another example. All right, so here I have another example, and this is a trade on pound CAD. You guys already seen this analysis. I believe I showed you this trade earlier. And this is another one of those cases, so this was an advanced breakout, okay? So the advanced breakout was taken right here on the 1-hour chart as the 4-hour chart bottomed out, 1-hour chart gets squeezed out to the upside, and then it exploded. And you can see here when it exploded, right away broke that 4-hour 50 EMA to the upside. Great. So pretty much the first day I bulletproofed my position, right? That first day I bulletproofed, locked in, eliminated all eliminated all risk at that point. So I took my stop loss, moved it to just above break even on that initial breakout. When the first day came to an end, just moved my stop loss to just above break even. Okay. Then it kind of pulled back, it kind of stayed there, and then as it started to go back up right here, as it started to go back up, at this point, again, I took my stop loss and moved it to just below that 4-hour 50. I typically start off by trailing the 4-hour 50. That's what I typically do, until it starts exploding massively to the upside, but I typically start off trailing that 4-hour 50. So I wait for that 4-hour 50 break, then I will bulletproof my position. Once it kind of continues with the trend, then I will trail the 4-hour 50. That's what I typically start off by doing, and then it exploded even higher. So the second time it exploded, then I kept on trailing that 4-hour 50, a little bit more. And then I had this pullback, and then it continued to go up. But you see here, it's not rejecting the 4-hour 50 anymore. At this point, it's holding a trend line. So as this trend line developed as support and resistance, then at this point, because this was the third rejection of the trend line, so at this point we can say the trend line is proper support. So at this point, after this rejection, I went and started trailing the trend line instead, right? So I'm trailing the trend line, trailing the trend line. And then at this point, my stop loss was like right here, and I was waiting to see what was going to happen, because yes, I can let it go a little bit farther. And when you're trailing, trail safely, like way below, because it can form like a massive low test, and you don't want to get stopped out because it forms a big low test reversal. So when I'm saying trailing, like I'm trailing like way below that trend line or the EMA or the 1-hour 50. And if it breaks, I'll exit, right? Before my stop loss gets hit. But I don't want to get stopped out for no fucking reason, So by saying that, a lot of the times I don't even trail, like I will say, I will bulletproof, then I will lock in 1% and then we'll let it ride, because I will exit once it breaks down. That's the main part of this management. You exit when it breaks down, that level that you've been kind of watching, that support that's most active in a way, You exit when it breaks that support. So I don't want to get stopped out by a low test or anything like that. So I keep my distance when I'm trailing, so I will let it ride as far as possible. Then I'll slowly start trailing my stop, and then just safely kind of keep it nicely below. And then in this case, when it kind of fully cleared it, you can see here it was just kind of chilling on it. So I didn't want to exit when I was just kind of chilling in that area. I want to exit on a proper breakdown. And in this case, I was even still watching that 4-hour 50. I was watching to see, will that 4-hour time frame break it? And in this case, I actually exited not when the 1-hour time frame broke it, but when the 4-hour time frame broke it, just for more confirmation. I just wanted to wait for a little bit more confirmation because I was targeting much more than 8% on this. At the highs, I was sitting at 10 and I was targeting much more than 10. So I just wanted to be a little bit more patient, so I was waiting, okay, let's see, will the 4-hour chart form a low test or will the 4-hour chart close below it? And once the 4-hour chart closed below it, I took my profit, right? Exit on a trend change, and I saw that as a first sign of a deep pullback and a potential trend reversal on a 1-hour chart. So exit, right? Simple. Let's have a look at another one. And you can see, actually, I'll show you one more example here. And check this out. So this was that trade. If I didn't exit, look at that. It just kind of fell massively to the downside. If I didn't tighten my stop loss by trailing that trend line and I was instead trailing that 4-hour 50, well, I would have been, and I didn't exit manually, here I would have lost a lot of percentage. So I exited at the highs, I was running at 10. I exited for 8.4. Right here would have been above 6 or 5. Huge difference, right? And I don't like losing that much profit, so that's why I prefer kind of exiting on that trend change at the beginning, on that breakdown. So let me show you another example here. All right, here's one more example. This is on a euro pound trade. This is, I call this an IBOC, not a CBO, because it didn't fully clear that 4-hour 50, right? So I call this an IBOC, more of a rejection of the 4-hour 50. And in this case, this management went like this, so at this point, this was when the trade was taken. It popped to the upside. So right here, it broke the 4-hour 50 fully. Right here, 1-hour chart popped to the upside. But at this point, it's still, by me bulletproofing, it still would have been choking it because it can still pull back to the 4-hour 50, form a low test, and take me out if I just bulletproof the position, right? So I don't want to bulletproof. I bulletproof when it's like typically safely running at like 3%. Write this down. When the trade is running at like 3%, that's typically when I bulletproof, but 3% like after a pullback typically, so once it pulls back and then it starts running at 3%, at that point I will kind of bulletproof. Not when it explodes, is running at 3%. That will be a different management. That's a short-term aggressive management, and I will show you that next. Okay, but in this case, I typically bulletproof my position when it's like safely running at 3% or so. If you want like a number, but I don't necessarily stick to that number. I stick to just visual cues. When it's like clearly above, then I will start trailing. Okay, so in this case, what I ended up doing, it was pretty much after this bounce, so after the 4-hour time frame kind of bounced right here, rejected it, that was this pullback on a 1-hour chart. So once that kind of went up and rejected it, at this point I bulletproofed my position. That was right here, so right there I bulletproofed my position once the day kind of was coming to an end and price action was all the way up here. So at this point I took my profit, took my stop loss, and put it just above my entry price, okay, to eliminate all risk. And then during the second kind of pullback right here, at this point I'm like, okay, the 1-hour trend line is holding nicely, the 1-hour 50 EMA is holding nicely. I do not want to hold it down all the way to the 4-hour 50, because you can see it was kind of like started to accelerate. So I don't want to hold it all the way down to that 4-hour 50. So when this rejection happened right here on the 1-hour chart, I ended up taking my stop loss and moving it a little bit higher, locking in about 2%, 1.5% or so right there. And again, keep it safely below. So once this was rejected, I then moved up my stop loss and let it ride even farther. And then profit target was hit, so I didn't have to do anything. And this is what you hope is going to happen majority of the time, is that your profit target is going to be hit. The main thing that you don't want to do with trailing your stop loss is choke it, okay? So that's what I mean. Typically, I'm very slow when it comes to trailing my stop loss. I'm very patient. I keep my stop a lot of the times where it is, unless it's a big position, I'm targeting 6%, 7%, 8%, then I will definitely be locking in profit. But when it comes to like targeting 3% or 4%, a lot of times I keep my stop loss where it is and not really, then bulletproof eventually, but a lot of times I will not lock in profit for those smaller 3% moves or so. This was a 4% move, so at this point I locked in profit for about 1%, right here after that second pullback, right here, and let it ride, and then profit target was hit. So this one was easy. Didn't really have to do anything with management, just kind of moved up my stop loss twice, once to bulletproof and then once to lock in 1%. That's it. Let's have a look at another example here. All right, here's another example, and this is a Canadian CBO, so break and retest after that 4-hour 50 breakdown, right? So the CBO, same thing on a 1-hour chart. And this one, again, with CBOs, I typically start bulletproofing my position. I don't know if I mentioned this yet, but you can write it down. With CBOs, I typically start bulletproofing my position, so meaning moving down to 1%, once that 4-hour 50 EMA crosses past my entry price, right? This is an important part for CBO. For an IBO, it's once that 4-hour 50 has clearly been broken, okay? So write it, if you haven't, write that down. For an IBO and ABO, so for an advanced breakout and for an IBO, for these larger positions, so for an IBO and an ABO, I bulletproof my position once the 4-hour 50 EMA has been fully cleared, like nicely broken, and then even retested, after that initial pullback, after that 4-hour 50 EMA was broken, because I don't want to be taken out on a retest of the 4-hour 50, so I make sure I bulletproof once it's safe to do so. I don't want to be taken out on a retest of the 4-hour 50, so if I believe maybe with an advanced breakout that's safe, I can probably bulletproof even before the 4-hour 50 retest. But with an IBO, chances are I need to wait for the 4-hour 50 EMA retest before bulletproofing, if it's going to be tight, So you got to judge that yourself. That's your discretion when you want to bulletproof. But typically that's the general rule. For an ABO, IBO, only bulletproof once that 4-hour 50 EMA has been fully cleared, and then it's your decision how soon you want to bulletproof after it was cleared. On a retest or before a retest, after a retest or before a retest. With a CBO, it's a little bit different. With a CBO, I will bulletproof my position once that 4-hour 50 EMA has fully cleared past my entry price. So that would have been like right here, So at that point, it would have been right here at the end of the third day here, So pretty much right here. When the 1-hour chart was like right there, the 4-hour chart was like right here, the 5-minute chart was like right there. At this point, I took my stop loss and bulletproofed it. That's it. Didn't lock in percentage or anything like that, just bulletproofed it. Because like I said, I'm very slow with moving my stop loss, But I obviously want to eliminate risk when it's safe to do so. And for CBO, for me, in my opinion, it's safe to do so once that 4-hour 50 EMA has fully went past your entry price, clearly past your entry price, so that if it comes back for a bounce of that 4-hour 50 EMA, you don't get stopped out again. So it has to be nicely past that entry price, You never want to get stopped out on a retest. That's the thing. So always make sure your stop loss is safe in case there's a high test or something like that. So then I let it ride, and then after that we got this pullback. And over here I was already ready to exit. This is the reason why you don't want to choke your stop loss. This is the reason why you don't want to be like very tight below when it comes to trailing. At this point, I was pretty much bulletproofed, but I didn't lock in 1%. I was bulletproofed, okay? And it was after this bounce, this is pretty much, it was at the end of this day when I initially bulletproofed my position. So I didn't do anything, It was after this rejection when I finally moved up my stop loss and I decided, okay, well, trailing the 4-hour 50 right now is good, but it started kind of accelerating to the downside here. So I want to lock in a little bit more profit. So at this point, I locked in 1%. After this rejection, after this spike, I locked in 1%, But that was like way above here, So it was like way above there. I wasn't, again, trailing tight below the 1-hour 50 EMA. It was more still kind of trailing somewhere around that 4-hour 50. My stop loss was still a little bit above that 4-hour 50, locking at 1%. And then over here, good thing I wasn't on the chart, but this would have been an exit, So right here, once it kind of broke past that 1 hour 50 EMA, if I was on the chart at this point, I would have exited the position, but I was sleeping. I just kind of went to sleep at this point. This was already well into the London session, I believe, or maybe it was sometime during the New York session when I wasn't on the chart. But if I was on the chart here, this would have been an exit, because you can see it's clearly holding that 1 hour 50 EMA, So that's the thing. I don't want to hold a deep pullback to the 4 hour 50 because I will be losing a lot of percentage in this case because it's just clearly holding the 1 hour 50 EMA. So at this point, if I was on the charts, I would have exited. If it continued to go up, well, I would have only been taken out for about 1% here, So I'm glad that it didn't, because then I would have potentially, chances are, would not have gone up that fast, all the way up to there to take me out for 1%. But that's the thing, over here I would have probably exited for about 3%, and then it was a false breakout, and then it just kind of went back down and hit my stop loss for 5, hit my target for 5. So that's why, again, I don't want to choke it too hardcore with my stop loss, but this would have been an exit if I was on the charts. But the thing is, you're not always going to be on the charts. So you got to accept that fact. Because otherwise, if you decide that you're going to be on the charts all the time, you're going to have to be watching hour by hour by hour. What I tend to do is I tend to place alerts though, so if I am home but I'm not on the charts, at least I'm going to get an alert and I can see what's going on. But that's just another example. Let's have a look at one more. And here's another one. So this is a CBO, right? So another CBO that was taken. This was a nice one. And I don't think I have showed you guys this one before. Maybe I have, maybe I haven't. But this is a nice CBO. Look at that 4 hour time frame, right? So clearly broke that 4 hour 50, right? And then came back to retest that 4 hour 50 and the 1 hour 50 and form a head and shoulder pattern. Left shoulder, head, right shoulder. Beautiful resistance there, right? So that's a nice CBO. And then trade was taken early in the day on a 5-minute breakdown. And then it went, so in this case, again, the management is short term, right? But this is an interesting one. And I'll go a little bit more deeper into this. So enter on a trend change, exit on a trend change. That's the main part of this management. Exit on a trend change, what you believe to be a trend change. Okay? That's important. That's the main part. It's not the trailing. The trailing is to just lock in profit, okay, on those large positions. But the main management is exit on what you believe is a potential trend change or a deep pullback, okay? Deep pullback or a trend change. So in this case, a trade was taken and pretty much immediately kind of fell massively to the downside, like immediately, So pretty much once that day came to a close, at that point I bulletproofed, that initial day, because that was already a big drop. That was a huge drop to the downside. And by that time, the 4 hour 50 EMA already kind of moved past my entry price. So at that point, I bulletproofed, right? Then it continued a little bit lower the following day, right here. And at that point, I still kept my stop loss at break even, didn't do anything else with it. Then at this point, it broke past. So this is kind of when it broke past this support on a 4 hour time frame. You can see it's clear support, right? And I believe that was on the third day here. Yeah, on the third day, it broke past that support and kind of started stalling, started decelerating here, okay? And you can see when it pulled back on the fourth day, it had a pullback. On the 1 hour chart, it broke above the 1 hour 50. But what's more significant here? Exiting on the break of this 1 hour 50? Because look at the 4 hour chart. It was just retesting resistance. It was just a breakdown and a pullback to this resistance. So to me, this wasn't a valid exit. I wanted to let it ride a little bit more because it was holding valid resistance on a 4 hour time frame. So in this case, I would have exited if it was like starting to break that 4 hour 50 EMA instead, So you got to kind of make sure you're aware of what's happening on your charts. You don't want to just kind of stick to one management exit on a break of the 1 hour 50 EMA. You kind of want to utilize it all. Start off slow. Like I said, you start off slow and then you kind of see what's going on and you make a plan as it goes. The plan is from the beginning, exit on a trend change. That's it. It's vague, That's the plan at the beginning, exit on a trend change.
and then lock in profit as price moves down. But you also got to keep an eye out on what's the trend change, because sure, here on a 1 hour chart it started to break out, but it was just this retest on a 4 hour time frame. So at that point, no, that's not a trend change, that's not a breakout. It's more of a, what kind of strategy would this be if the 4 hour 50 EMA was lower? This would be like a ACB, right? So it's not a trend change. So at this point, once it rejected it, it started to fall back down. Now I really moved up my stop loss to lock in profit, so now I locked in about 1% and let it ride. So I pretty much kept my stop loss. Once it started to go down here, I moved my stop loss to about just above the highs here and locked in about 1% or a little bit more, 1.5, right? And then it continued to drop, and it continued to drop that next day. And then I went even a little bit further on my stop loss, because at this point it's accelerating. And you see here on the 4 hour chart, well, at this point I definitely do not want to hold the pullback all the way to the 4 hour 50. That would be crazy, because if I held that pullback all the way to the 4 hour 50 and it broke that 4 hour 50, I would have only ended up with about 2%. So at this point I started focusing on that 1 hour time frame now, So typically the farther it goes, then I start watching that 1 hour time frame, because the farther it starts accelerating away from that 4 hour 50, at this point I do not want to hold the 4 hour pullback. So I'll definitely be tighter on my management. And here, if it decided to turn around, this hit my profit target. But if it decided to turn around, then I would have exited for, somewhere on that 1 hour breakout. Exit on that breakout, because I would not want to hold that 4 hour pullback. So that's another example of, again, short-term management. And here's another one, right? So with this example here, again, this was an advanced breakout, or sorry, not an advanced breakout, an IBOB, right? So this is an IBOB because we don't have 4 hour trend change, it's just kind of 4 hour momentum. So an IBOB, trade was taken, and price started to fall down, So once it started to accelerate here to the downside massively, right? At this point, it cleared that 4 hour 50 EMA. And once it cleared that 4 hour 50 EMA, at this point, I locked in profit. Eliminated risk. So at this point, I bulletproofed my position, right? And then once it started to go down, then I pretty much started trailing that 1 hour 50 EMA. But at this point, first I started trailing the 4 hour 50. So you always kind of start off with the 4 hour 50, you bulletproof once it breaks, then you trail the 4 hour 50 once it starts accelerating. And the farther it goes, right, then you start trailing the 1 hour 50 eventually. But in this case, it was the way it went was kind of broke the 4 hour 50, then bulletproof the position, okay? Continue to go farther down. So when this day kind of closed, it continued to go farther down. At this point, put your stop loss somewhere above that 4 hour 50 EMA, and then profit target was hit. So that's all I really had to do in this case. If my stop loss wasn't hit, then the next step would have been like trail the 1 hour 50, because it went pretty far. I wouldn't want to hold that 4 hour pullback. So the next step would have been like trail the 1 hour 50. Right after that, if my stop loss, if my target was not hit. So that's it. It's simple. And majority of the times I just showed you a few examples, couple where the targets were hit, couple where I had to exit manually, but that's kind of how it goes. When it comes to trailing your stop loss, be easy with it. At least I'm very patient with trailing my stop loss. Like I said, a lot of times I just bulletproof and let it ride. And we'll move my stop loss to 1% locked in. Once it has kind of moved down safely, once that 4 hour 50 EMA has kind of crossed, and I can still kind of bulletproof my position and lock in profit and still be nicely protected. Whenever it comes to the stop loss, you don't want to choke your trade because of your stop loss. And what I mean by that is if it comes to retest the 4 hour 50 or the 1 hour 50, whichever one you decide to trail, make sure that on a retest you don't get stopped out for no reason. So keep it safely above. That's why I said when it comes to trailing, I'm very safe. And a lot of times I don't even trail, but I will like lock in break even and lock in 1%. And the larger the position, then the more I will lock in. Like on those big trades of 8%, I locked in much more than 1%. But the main management here is exit once you believe a deep pullback is happening, or once you believe a trend change has happened. That's when you exit. So you would have been exiting on like the 1 hour 50 EMA breakout a lot of the times, or a trend line break, that kind of stuff. That's the main part of this management, is exit on that trend change, right? That's the main part, exit on a trend change. And it's typically is on like a 1 hour 50 EMA break and such. Okay. So that's how it goes. That's short-term management. And you can apply this to day trading. You can also apply this to swing trading, right? And it would be the same kind of thing. It's just, it would be higher time frames. So the daily 50 EMA was an example instead of the 1 hour 50 EMA. But that's kind of how it goes, So that's the management. Always set a target. Target is always set. Like you're always going to have some kind of a target based on the strategy itself. But the management is important because you don't want to be all of a sudden, you want to know which management you're using from the beginning. And from the beginning, for me, it's always this. It always starts off, I take a trade, my management is immediately short-term, meaning exit on a trend change right away. That may change as time goes on, where I will start moving my stop loss further down to lock in profit. And I mentioned, I hope you guys took notes, but I'm going to say it again quickly here. So if you haven't, take notes again. For an advanced breakout and an IBO, a bulletproof once that 4 hour 50 EMA has been fully broken. Okay, for an ABO and an IBO, once that 4 hour 50 EMA has been fully broken, at that point I bulletproof my position. Okay, and for an advanced breakout, it's pretty much immediately once that 4 hour 50 EMA has been fully cleared. For an ABO, I pretty much immediately bulletproof, right? For an IBO, that might be too tight. So I will typically, for an IBO, I will typically bulletproof after the 4 hour 50 EMA rejection, break and retest. Once it starts going back up, at that point I bulletproof, okay? And then the next time I will move my stop loss is like once price action has massively fallen to the downside or to the upside, and then I will lock in 1%, maybe a little bit more. But again, keeping it safe. And then mainly it's exiting on the trend change. On whatever price action is holding, you might start off by trailing the 4 hour 50, then it might start off accelerating and you will start trailing or focusing more on the 1 hour 50, right? Not necessarily trailing, but your management might change from, okay, once it breaks the 4 hour 50 EMA, I will exit, to the farther it goes, to the faster it accelerates towards your profit target. Then your management might change from, okay, once it breaks the 1 hour 50 EMA, I will exit. Okay, so you got to kind of create a plan. The plan is from the beginning, exit on a trend change, right? But that might change a little bit from a 4 hour 50 EMA exit to 1 hour 50 EMA exit. The farther the position develops, the more it drops and the more it accelerates. So I hope that makes sense. Again, management is important, but this is kind of always how it starts off. In the next one, I'm going to show you a short-term aggressive management, which is even exiting before that trend change, before that 1 hour 50 EMA break, right? So I'll see you guys in the next lesson.